Welcome to In the Balance, the podcast to help you build your dream team of experts to make your financial goals a reality.
G'day, how you going? Phil Tarrant, co-host of In the Balance, which I recall with my good friend, colleague and accountant, Munzurul Khan from KHI. We're back in the studio. Munzurul, how you going? You well?
Very good. Thank you. Thank you for having us.
This is the 12th episode.
It's 12th?
12th. So I've been doing this for a year. How did that happen? Someone told me it was only like 16 weeks to Christmas recently, but yeah.
That's right. That's right. Absolutely. And then we sort of end of August and then looking into September, and I look back and I say that I still remember the first one that Trevor and I did.
That's right.
And you asked the question, what is KHI and where does KHI start from, right? And then we went through with all those different layers of the partners and the talents, different services and value proposition and the charity and lots of things, right?
Yeah.
And now we look back and we say 12 episodes.
Yeah. Oh, look, I've enjoyed the journey, learning more about KHI. I must admit, I knew a fair bit about the business prior, but I've uncovered a lot of things I didn't really know. And it's grown a lot just in that 12 months. You keep introducing new partners and new ideas and new aspects of your business. We saw, I think it would have been episode number 10, your new property buyer.
That's right.
Arm under Ross Le Quesne.
Yes.
So nothing really stays still at KHI.
We very, very blessed. If anything in our group we're sort of saying at the moment is modest level of growth is what we are after, and perhaps managed level of growth. And we actually not actively going in the open world and looking for a lot more new partners. There's few talents that we're looking through in some of the areas of deficiency, but we're more of a consolidated stage. But at the same time, we're sort of having so many options at the moment, and we're blessed.
Yeah, absolutely. And I think when you do the right thing, good things happen. And typically, from a professional point of view and a professional advisory firm like yours, people are attracted to your firm. No doubt people are calling you up all the time saying, hey, how do I sort of get in and join KHI? And you have many different facets, from financial planning to finance to insurance. We've spoken with all these people, buyer's agency, traditional accounting, SME type accounting, as well as supporting people like myself who are property investors and on their wealth creation journey. And in many ways, it's a universal spirit of camaraderie, I would say, from my interaction with KHI. But you also have a young cohort of people who I think, we're covering the old guys now. So I think the long-term future for KHI is absolutely bright. And one of our guests today, Adam Sim, is certainly going to be one of those talents moving through. But, you're going to do this to the day you die, right? You're not going to stop doing this. So you've probably still got another 30, 40 years of work ahead of you.
No, I enjoy what I do and I absolutely love what I do. But I'm being so looking forward today with sort of Aaron coming over, right? And Aaron being one of our real young talents sort of came in from a different industries. I would love to know Aaron a bit more throughout this today. And where Aaron is exciting to us in many ways, that one is the talent attention, talent retention, talent nurturing, and I suppose the future of the talents, right? I look back into myself and yes, I probably would be keep doing as long as we can, but none of us, we get younger, right? The question is that what do you do when you build this? We've always said that there is no end goal for us, or exit plan is a plan of perpetuity.
Yeah.
So the question is that what do we do at the exit plan? And the exit plan, we hand it over to the next generation. And the next generation is the right level of the generation that we need to. And Aaron, I'm very excited to have Aaron with us today.
Yeah, and Aaron, welcome to the show. It's good to see you, mate. I know of you, and I think I know your sister. So you're a mortgage broker?
Yes, I am, and thank you for having me.
No, you're welcome. I haven't been a mortgage broker very long now.
Not long at all. These suits and pants, last time I dressed this good was my wedding.
Oh, was it? Oh, there you go. So how long have you been at KHI now?
I've been there since January 2022.
Oh, okay.
I started there.
Yeah.
So about 3 years now.
Okay, and before that, what sort of work were you doing?
Yeah, very different, Phil. I was in the fitness industry for 10 years as a personal trainer. Looking after people like myself, corporates that had lack of time, that wanted to get fit and healthy because of the stress.
Yeah.
Now I understand that stress they were going through.
Yeah.
So completely different to what we're doing now.
Are you as fit as what you used to be now that you're corporate in a suit, or have you lost some of your fitness, you reckon?
I think I've written more loans, but maybe increased more kilos at the same time.
It's hard. It's tough, hey? It's a lot more sedentary, right? You're not working out all the time. It's...
When my clients used to complain, I just used to say, stop making excuses. Now I make those excuses. I understand what they're talking about.
How do you know when you're making excuses and you try and recalibrate yourself? Because you know what you should be doing.
Yeah.
But you don't always do it, right?
Correct.
Do you find time? Do you carve time out during the day for fitness?
I do. It's a very important part of what I do. I train 6 days a week.
Okay.
I'm always up early, 5 to 6 a.m. I think, with mortgage broking, it's quite stressful in a sense. And, we can be on 6-7 days. So it's my only time that I have to kind of recharge, reset before the day starts. So
you have to do it in the morning, do you?
Always do in the morning.
Yeah.
Because nighttime, usually working.
Yeah. It's a bit like that. What do you do? Just at the gym, like push on weights and stuff? Or you do cardio?
A bit structured.
Yeah.
I walk, I run, and I gym.
Okay.
Yeah. So it's a bit, once I've started now, it's hard to stop. It's just a bit of routine at the moment.
And walking, and this is something which is probably more practical for most, and they can get some incidental walking during the day, executives and stuff. What do you recommend?
I think walking. It's so key, not only physically and mentally, just to get out of the office. Like I look at my phone at the moment and there's only 2,000-3,000 steps from sitting down so much. So I think walking can help both physically and mentally.
Everyone reckons 10,000 steps. Is that a misnomer, or is that actually a number that's meaningful? It's sort of how you walk as well, right?
Well, I think it's 10,000 is a target, right, to get us going. But I think the more you can do, the better. But more the consistency over time. We can probably hit 20,000 in one day, but more so just starting small and doing it over a longevity period.
Okay. So what's the metaphor with sort of walking and mortgage broking? Is it, the more you do it, the better you get at it, and the better the repetition, the better consistency, and, you get pushing on?
I think the gym has a lot of correlation to business, to life.
Yeah.
Which is the little things that you do over time consistently lead to result. And I see that with my clients, with property investing. I've seen that in my own journey in business. It's the, winter morning and you got to wake up for that walk. Same for, property investing, business. It's those little things, making that call, emailing that client, having that tough conversation when you don't want to, all leads to that success that you're after. But I think people give up too early when it gets tough, similar at the gym. When winter comes, the gyms get quiet. Yeah,
they do. And it's business and property investment, for example. A lot of people think it's easy and it's very glamorous and you do all these great things. Most of the things you do aren't. You got to put the time in, right? And you put the time in, 95% of it might be hard graft, or 5% of it, which is the nice bit where you get the accolades or the real engagement. But, it's if you want to be a property investor and want to be in business, you got to do the hard stuff. And the hard stuff is the stuff normally you don't want to do,
Yeah. 100%.
Much like the gym.
Yeah,
much
very
like
much
the
so.
gym. You must know about that, Munzurul. You'd be hitting the gym every morning, wouldn't you?
I struggle.
No. Do you walk? Do you walk on the weekends? You do?
I walk a bit, and I must say that there was a point of time that Aaron gave his best mate, Luke, and Luke was the personal trainer for a period of time. And we have to do it. I agree, we have to do it. We've done quite a bit of a session. I'm sort of a bit off at the moment and wanted to go back to it.
Yeah, I know. I'm a bit the same. I always make excuses. It's not very good. But I need to structurally build it. I don't like individual. I like quite team sport school.
Okay.
But I try and keep active in other ways. But I can't think of anything worse than going to the gym and pushing weights. I avoid it like the plague. But I find other alternatives, which is pretty good. So, but this is the talent, Munzurul. It's talent comes in many shapes and guises, and you've now got within KHI, you've got a broad fabric of different people doing different things across many different sort of interconnected disciplinary areas. I don't know if there's many other arms you can add to KHI. You've pretty much got all bases covered now.
No, we've been very blessed. If I look back into how we started this 12th session, so the first session was Trevor and myself as being the founding partners here. And then we went through all the different service lines. So we started with accounting, we went into financial planning, mortgage broking, bookkeeping, law. We went into insurance, then we went into the buyer's agency. And then we went to a specific field, which is the estate planning side of it.
That's right.
We also touched the charity side of it as well. And one of the session, you and I, we discussed about the risk. So all of those different things, what we do, where we're being mindful of providing all of those different services is that we don't sell any service. Means that we're very, very mindful in terms of the independence. So each one of the service line is a separate legal entity to start with, yeah? And whenever a client sort of comes into any one of us, we ask this question to client is that, do you have a good mortgage broker? Do you have a good buyer's agent? Do you have a good accountant? Do you have a good this? Do you have a good this? And any of those relationships that they have, we respect those relationships. We nurture this relationship. There's many buyer's agency I look after. There's many financial planning group I look after. There's many mortgage broking that I look after. So each one of those relationships, we respect it. And there's no other way of doing it in the longer term.
Yeah, and I think that's important when you get a bit more sophisticated potentially in your wealth creation journey. You need to sometimes get all of your advisors together around the same table. You know, some of them may be part of the KHI family, some of them may not be. And I know I still bring people into our conversations who are sort of from outside and advisors I use in other parts of our business and wealth creation. So it's important that you can shepherd those discussions and you know, essentially be the keystone to ensure you're getting the right advice that you need and balancing those relationships. And you know, the balance of power will in your advisory discussions will often be shaped with what the outcome is. Sometimes your accountant will be a sort of a leading voice in it, and then at other times your accountant will be, you know, very much at a tactical level of it, you know, depending what you're trying to achieve.
It's the collective intelligence, right? And the collective learning, so to speak. So I had a gentleman this morning as an example. The gentleman came in, gentleman had some health issue, received a massive amount of insurance payout, and it's all tax-free insurance, which went directly into the superannuation fund. Young gentleman, but has got a massive health issue and perhaps the longevity is sort of questioned. But on the other side, he's got this massive payout on the insurance. So his role was, or his question was that, Munzurul, how do I look after the super fund? What do I need to do in terms of building myself, building my family, and passing it to the next generation, right? So the first person which I bring in is Tarrant in terms of the estate planning. Second person I bring in is our financial planning team in terms of going deep dive into the financial planning. Third person I bring in is our deep dive superannuation division, which goes deep dive into it. And then the gentleman sort of says that, well, we need to look through the buyer's agency side of it because we want to look into some of the residential property. The buyer's agency comes in as part of the service line as well. Naturally, there's a mortgage attached to it, so you bring in the mortgage, right? You do all of those different services, and then you sort of say, where does it sort of come into myself personally? We stay there at the back. We are in a way project managing all of those, and we're doing that compliance level of the work. But the beauty of having that collective intelligence is that the client receives that holistic service as opposed to just that one brand.
And that's very important. It's got to be holistic. It needs to be focused. It needs to be outcome orientated. SMART goals, obviously, pretty much in everything that you do. But you know, you have enjoyed uncovering the many different. It's like an onion, KHI, really. Just keep pulling back the layers, and something else appears. And this isn't the end of it. This is obviously the 12th installment of In the Balance. That we're working in the background and considering what the next series is going to be. So watch this space, and we'll have some news on that shortly. But what's going on in the market at the moment? Do you know what I spent this morning looking at, Munzurul, was went and checked that all of my interest rates had been the 25 basis points from that August cut have been passed on, and I'm happy to report that across all my mortgages they have been passed on. So I've done that bit of work, and I've calibrated sort of cash flow forecasts as a result of, you know, sharper interest rates and looking at my position. So I did that bit of work today.
Well done.
So I'm sure
well done.
You would have told me to do it. So it has been done, which is good.
Yes.
And everyone should be doing that, right?
Absolutely. Because where are we at the moment? So we've been speaking about this interest rate for quite a while. And there was a period of time that you and I spoke that there's just so much ambiguity on the market. There's so much noise in the market that which way do we go, how far do we go, and so forth, right? I think there's still an element of ambiguity in the sense that whether we're going to have a bit more drop, whether we're going to have 2 more drop this year, whether it is 3 more drop between now till June next year. Inflation, we always knew that it would just go up a little bit before it gets really managed. And we're sort of seeing that hit of that sort of early 2s to go into mid to late 2s. This is part of the reason why RBA was so conservative, even though we're getting very close towards that 2% and so, right? But then we sort of say that, well, we look back in the history and we sort of say that when we say, well, there's 7 years, 10 years, the price is double, it really is just about 2 to 3 years that you've got this massive growth. Massive growth, and timing of those 2 to 3 years becomes so crucial in many ways. And as a property investor, we're not really doing that timing. We are investing for long term, but it would be still good to have that timing at least being adopted as part of your decision making. And I would dare suggest that that timing perhaps started about 6 months ago, right? 6 months ago when the interest rate was just about to go down, just went down for the first time. And what history tells us is that that bit of the timing lasts anywhere between 2.5 years, 3 years. You got this massive growth. I was reading these articles the other day which shows that last 4 property boom and the interest rate drop cycle, within 2.5 years, the prices in general increased between 25 to 39%. Now, one can look deeper into this statistics, and I'm sure many holes can be found. But the point is being raised is that as soon as the interest rate start to drop, that's the period of time that it does quite a bit. So very positive about the property market over the next couple of years or so. And the rents increases, yes, okay, it's being subdued somewhat, but it hasn't, depending on where it is. You look into Melbourne as an example, that the vacancy rate is sitting literally at about 1% or so. Some of the regional areas being very low. Queensland, the rent is still very high. New South Wales is not dropping, right? So in many ways, the rents are there. If the interest rates start to coming, I think good times are coming in from the property investor side of it. Really good time.
And hence the reason why you need to be dialed into your personal financial affairs and working with a firm like KHI who can, irrespective of where you are in that cycle, there's probably a supporting arm and supporting mechanism there. At some point, what I would say though is if you are a property investor and you're not liquid at the moment, if you haven't topped up, and if you're looking to grow, ensuring that you've spoken to your accountant and you've got your equity sort of side squared away and you've got dry powder. Are you seeing a lot of that, Aaron, at the moment? People sort of beefing up and limbering up for what will be sort of growth moving forward?
Yeah, I would say in the last month or so was the most amount of traction that we're getting, not from just new clients, but existing clients coming back, seeing the movement in the market and see the opportunity in the market at the moment. So majority of our clients are investors and probably getting a contract every single week at the moment with clients buying. So I think they see the opportunity, they're taking that opportunity, exactly what Munzurul said. There's a time, and I think that time is definitely now for that investment into the property.
How are lenders at the moment? Are they challenging to deal with? They sort of ebb and flow. Sometimes they're very easy and you get a hold of them and they make it quite simple, sort of, securing new finance. At other times it's a lot harder. What's the sort of overall synopsis of all that at the moment?
Yeah, I think as the interest rates have dropped now, what we see is the BDMs are becoming more responsive.
Yeah.
I think they're seeing that it's competitive in the market amongst the other lenders. So that want of new business is I can see is the change in policies that we've seen around the first home buyers grants that we've probably just seen, around HEX policies. So there's been a lot more flexibility on top of the interest rate drops. So I would say it's easing in terms of the lending at the moment.
Have you had much, and you spoke there about first home buyer incentives. So we saw only a week or so ago the government has fast-tracked its introduction to removing some of the caps around the 5% equity required or 5% deposit for new purchases, first home buyers. Has it made any difference yet? Are people calling you up yet asking about that, or parents asking about it for their children?
Yeah, we've had a couple, I guess more so because our client base is more investor based, but we've had some people come back, especially because they removed that income cap, which was $125,000 for single, $200 for couple, and they moved the purchase price in Sydney from $900,000 up to $1.5 million. So that makes a huge difference in terms of the borrowing power for that first home buyer. But in terms of personally at KHI, our investors are just investing like normal for them. No real change.
And on that 5% scheme, there's no cap on salaries there. Everyone can subscribe into it now.
Yeah, that's right.
So question then, if you've only ever bought investment properties in trusts, Can you dial into the grant? Like if you've never actually had a personal name on a home loan and or a property, does that mean you can subscribe into it?
Yeah, look, it's a bit of a grey area,
Yeah.
I would say. The rules are, have you had any equitable interest in a property?
Yeah.
And so, I would say no, because they have had an equitable interest in the property despite being in a trust entity.
Yeah.
But yeah, there are arguments around it. I've had cases where husband and wife, or just found a newfound boyfriend or girlfriend, come on as a borrower on a property that, say, the husband or wife owned. I've gone to the lender and said, is he or she still eligible for the first home buyer's grant? A lot of lenders have said yes, because technically she hasn't owned that property.
Yeah.
So it's maybe lender per lender base, but I think that's still the ruling, is that equitable interest in that property, or have you ever bought property in the past?
Okay.
I think it's one of those things. You're right. I mean, your answer is completely right. That one of those things that one could be very, very careful, because I've seen this field that it's sort of going back and getting reviewed and audited 4 or 5 years later. Yeah. The best answer that one can say is that not so much whether we ask that to the lender, we do, but we actually need to go back to the OSR. And we got to go back to the OSR saying that this is what the circumstances, absolutely everything is being upfront, communicating, saying this is where we are we eligible to it? But the answer come back to exactly what you say is the equitable interest. Where it gets a bit tricky is that what is the definition of the equitable interest in a trust? If you are an appointor, you are in control. And if we look through the definition of the beneficiaries, the definition of the beneficiaries are very, very wide. Even if it's on mom and dad's name, is that you still are a beneficiary because it covers the kids and the grandkids as such, right? Now, what we have seen with the OSR side of it is that when you are the secondary beneficiary, so to speak, which is kids and grandkids, OSR takes a view saying that you don't own it. It's your mom and dad trust, you're just a beneficiary, right? That's what they take. But if you are the primary beneficiary and or the appointor and or the director of that trustee company and the shareholder of the trustee company, this is where the OSR takes the view saying that, well, you do have control and you do have that equitable interest as such. So again, we must go back to the OSR because they do come back. I've seen it 3 years, 4 years, 5 years later, come back with that sort of the rate as well as the interest and penalty.
Yeah, I'll give you a hot tip right now. The government, whether it's the federal, state or even local government, ain't going to do themselves out of any tax income. So they're not going to be giving away free money at the moment. So make sure you cross the I's and dot the T's. But you spoke about Munzurul, what you think will be quite vibrant markets moving forward. You spoke there about interest rates cooling. You spoke there about some economic fundamentals, particularly around inflation data now within the target band, maybe on the low side of the target band, which may indicate potential more interest rates coming through. Do you think the changes to the first home buyer arrangements, bringing it forward, number one, and then number two, removing those salary caps, is going to really be an accelerant to prices even further? Because if you think about where most, inverted commas, most property investors play, and it's very similar space to where most first home buyers will be operating. So you're going to have hyper focus on bottom third markets, I would say, moving forward. That's going to put a lot of pressure on prices.
100%. I cannot possibly agree more of what you just said, right? We've seen that history over and over and over again, right? Is that it's the demand, it's the supply. And the demand is there. We get that, right? So we're not sort of creating more demand. Demand is there. It's just that inherent demand is there. It's the supply side of it. So very often we say that, well, we increase the supply, but where do we increase the supply? This is a supply where we're increasing in terms of easing the monetary policy, so to speak, to make it a bit more accessible. The challenge with this, what we have seen over the years, there's many different format it came in over the years, right? And challenge is that, yes, the first-time buyers will just buy a few more properties because it's a bit more available. And because it's a bit more available, that lower end of the market has started to go up rather quickly. And then it sort of becomes just a bit more that they sort of do. And because it goes up a little bit more quickly, that sort of follows through every single other end of the market, right? The first layer of the investment market goes up a bit, and it just have that sort of ripple effect and the flow-on effect. And unfortunately is that if you look back to it after, say, 3 years, 4 years, 5 years, and you sort of say, who actually won? Yes, there are a few first-time buyers who sort of gone into the market. The first layer of them, the people who sort of really came in right at the beginning, they probably did. And then it sort of almost become priced out simply because everything gone up. And the ultimate owner goes back to the existing investors.
Yeah.
Which is exactly opposite what they were trying to do, right? So that's why I always struggle with that side of the supply. The supply that sort of always works is bring in more land.
Yeah.
Bring in more land. Australia is, if we look back, 25 million population, and we really sort of just this small portion around that sort of the Australias that we populated, everything is in there, right? That land, the infrastructure is the one that sort of, if we bring that in, that's the true answer.
And that's the issue, right? We're again concentrating, putting all the pressure on demand. We're not working on the supply side. And these, and look, I do acknowledge it's a very challenging thing to balance, but there's going to be a significant amount of demand, particularly in those lower third property price points. Treasury modelling coming along to it, they use these numbers that it's, it's a fraction of a percentage point, they're telegraphing they think there's going to be a change in property prices and it will normalise over 5-6 years. I don't subscribe into that Treasury modelling. I think you're going to get a very, very different outcome as a result of this. Now, what does it mean for property investors? Well, if you're in the market, brilliant. What does it mean if you've got young kids trying to enter the property market? If they're ready to go now, brilliant. Yes. However, prices are probably going to be a lot higher moving forward. And I'd like your counsel also on anyone who's operated in this space, first-home buyers or parents recommending it, taking on a 95% loan, you might only need a 5% deposit and there's no LMI to pay. 95% loans still need to get repaid.
Absolutely. And I think this is one of the points that I wanted to really share, and this is the opportunity to share, is that what do we learn from that, I suppose, the challenges and the trauma that we all went through where the interest rate gone up so quickly and within a short period of time. Challenges that sometimes we sort of like when the bad time is sort of the bad time, the good time comes in, we sort of almost forget the bad time. I don't want to lose away that bad time and what we all went through in the last 2 or 3 years and some of the traumas. I've seen as firsthand that so many of my clients, they had no choice other than selling the properties. And you're selling the properties in a market where you've got less buyers simply because the interest rate is high, the price wasn't there. So for years and years and years and years of hard work, simply because that it was overdone, is that you lose quite significantly. I want to take that learning lesson and I want to say that, well, as the interest rate sort of goes up and down, it goes up and down in cycle, right? Yes, it will go down for the next say, couple of years or so, that it would probably go down. There would be a point of time it would stabilize and it would be going up again. Your interest rate math is that you've got a bank's math and you almost have to do a math on your own and say that, well, in the longer period of time, if that is where the interest rate is averaging, in the longer period of time, if that is the cost that I'm paying, yes, I'm doing a maths on the bank side of it, I sort of pass it, but can I pass it in my own way? Would I be able to pay those within that period of time? Point one. And point number two is that all the contingency that one takes it, right? That I don't have the employment, something happens, life changes, this happens, that happens, that happens. Do I have all of those? So I think as an Australian is that the last 2 or 3 years, the experience that we went through, hopefully we take a little bit of cautiousness within that experience, that optimism is good, but it's the balanced optimism.
Balanced optimism is absolutely critical, and there may be sort of second and third order impacts of this. Now, I think if you're in the market, it's going to be an accelerant, obviously, to property prices. But I don't know if you ever read on this, Aaron, but they're already saying that LMI prices may increase by 20% as a result of this, because if a huge chunk of LMI providers' business is replaced by a government guarantee, they need to keep economical, and they've got businesses to run. They're already saying that LMI price might increase by 20-odd%, which for property investors and people who are using LMI as a market sort of enabler, you're going to have to price in more costs. Obviously, it all gets capitalised, but still, you're going to those repayments.
Yeah, exactly. I think you're spot on there. As Mun said, with the 95% loan, I think what they don't talk about is those actual repayments that first home buyer really needs to make, which really needs to take into account, which is the cash flow side of things of these mortgages that these first home buyers are getting in. There's a lot of pressure with the first home buyers to get into the market. And I guess if your first property as well, you don't have right advisors around you, looking at the other side of, okay, can you actually manage it? What's your cash flow buffers outside of this? If you were to lose your job, do we have 3 to 6 months of expenses to support this mortgage? Because a lot of these times, these first home buyers have parental guarantors, have their parents' houses on the line as well, which needs to be considered.
Yeah, absolutely. And there needs to be some education around this, and it's the obligation of parents, obviously, to try and help their parents out, their kids out. But kids need to know what they're getting into, and there's always a lot of rude shocks with this.
Saying all of those, Phil, is that I was in a seminar with Rich Harvey the other day, and
How's Rich going?
Yeah, it's going well, very well.
Yeah,
good friend, right?
Yeah.
So Rich and I, we were there, and a couple of other people were there as well with the doctors, and Rich was going through with all those different statistics, saying that these are all the median price, and this is what it is. And then Rich says, "All right, guys, tell us what will be the median price in Sydney in 2045, and on this sort of the basis." And what would be the median price in Sydney in 2050? And it's not attractive, right? Because you look into 1.6 or so at the moment, and at that point of time is that it's about 6.5, or even more.
What? Hang on. What? Sorry, slow down. When?
In 2050, 25 years, right? The median price you look at quite easily is around 6, if not higher than 6 mil. Now, we look into now and we say crazy as it is, but I sort of relate to it. The very first property which I bought all the way in Campbelltown at that time, not Sydney, the median price was about 500,000. You would get a fantastic terrace at 500,000 back in 1999, right?
Yeah.
But now we sort of look back and we sort of say it is silly. And the reason I'm sharing this is that in the longer period of time, prices unfortunately are not going to decrease, right? So where there is an opportunity, we buy it. We are not against this, where there is an opportunity, but it's a measured way. It's a calculative way. It's sort of bringing in all of your mitigation as such. Because, Aaron, when you speak about some of those interest rates, very often it starts with a interest only, right? But we can't do that maths on interest only. We got to say, well, sooner or later we got to pay off that loan. So the interest only goes back into P&I, and the P&I, because you go into interest only for 5 years, 10 years, and some of the banks you go up to 15 years interest only. That means you literally got just about 10 to 15 years to pay off the entire loan. And your repayment becomes quite substantial at that stage. Very often, someone refinances and he goes somewhere else, and whether you sort of restart this. Yeah. But the point is being left is that it's balance on both ends. That yes, the young investors and young sort of the first-time buyers, they need to go into the market. It's not dropping, but at the same time, taking everything into account.
Yeah, okay. So that's crazy, those numbers. So that's 25 years. It's like, the mind boggles. And mine absolutely boggles. But you absolutely need to get the right advice and the right connected advice. And we've spoken a lot about this on this podcast series in The Balance. When do you know you're getting the right advice? Which advice do you prioritise? How do you know if your advisor's not very good? Do you still get people finding you sort of saying, "Oh, I think maybe I've outgrown my advisor. Maybe do you mind having a look at this?" Do you normally find things that aren't good? If someone feels like they've outgrown the advisor, they probably have, haven't they?
They have. And when we say can we find things, is that there are so many commentators in the open world at the moment, right? And definitely there are many good commentators, but there are quite a few noise as well. And the challenge with some of those noises side of it is that for someone who's an unassumed mind is that how do you know what's the truism back to the actual knowledge, right? And how do you get directed in a way, and you sort of look back and say, "Oh, Shivas, this is a massive transaction. You can't just buy and sell every other day. There is a huge selling cost, transactional cost." So a fundamental thing which I always sort of say is that work through with someone who's got the experience, and the experience means someone who's actually doing that on a day in, day out basis. Someone who's been on the market over that period of time, someone who's got that sort of breadth of that experience, number one. Number two, work with someone who's been in the profession for a good period of time, right? Because very often, sometimes I sort of see some of the younger sort of commentators is that their reference point is 4 years or 5 years or 7 years. Nothing wrong. It's just that they've seen 4 or 5 years or 7 years. But over that period of time, 4 or 5 years or 7 years, it's short, right? And yes, you can read as much as you read, but it's living through that experience, right? is that's where you sort of pick up. So there are noises, but at the same time, there's still some of the older advisors around, right?
The older heads, the older hands. Where do you sort of orientate yourself around what's happening out in the market these days? You just on your social media looking at everyone's feed coming through and saying, "Oh, that's a good idea. Oh, that's not a good idea. That's a good idea." A lot of social media experts out there now.
Totally. I think the beauty is I just walk to Munzurul's office and say, tell me what's happening in the market.
You got the oracle. Yeah.
I said, Daily Mail's telling me this. Is it right? No, I think listening to podcasts is key for me personally. Of course, reading your typical financial review to understand what's happening in the market. But with the lenders, we get a lot of updates anyway. Our team meets every Wednesday and we get a market update of what's happening in the market. Yeah. So we're pretty in tune with what's happening because it's just shifting so much so quickly. So we really need to be on top of it. But we're in a good group of people in KHI in different industries, and seeing different views really helps us understand the market holistically as well.
And as someone who is relatively new to KHI, and Munzurul's talking about a firm in perpetuity, so this is like, something which continues, which is an exit plan in itself, right?
Yeah.
When you think about it, how do you see KHI sort of growing and evolving with a balance between the old guard who are considered and smart and regarded and huge amount of experience and have seen everything, and i.e. Munzurul and Trevor, and then you've got sort of a younger cohort yourself who are ambitious and hungry and focused on skills development, very coachable. It's quite a nice marriage of the new and the old, isn't it?
Yeah, I think the beauty of the balance of, say, different ages and different experiences that we have at KHI is that we have a wealth of knowledge. And exactly what Munzurul said, there's advisors that have been there for maybe 4 or 5 years, but they haven't been there for 15 years or 20 years and 25 years. And there's different cycles, there's different things that happen during those times. And yes, we've got a lot of ambitious people at KHI, but I think the beauty of having wiser people that maybe been through the journey before, they can stop those mistakes that you're about to make because they've seen it before, as well as been through that journey. So I think myself, I like to go for certain things, and I've been stopped by Munzurul many times, and I think that's really helped in the journey. If I didn't have that mentorship there, probably would have made a lot of mistakes along the way.
Culturally, how does that work? Is it the younger crew have a voice, they can express their views and their opinions?
Yeah, definitely. Yeah. I think KHI is...
Or is there a suggestion box out the front of Munzurul's office? Is it?
It's 1-800, no one cares. No, I think we've Munzurul's fostered a very strong culture where everyone has a voice, despite being there for 1 year, 10 years, as long as it makes sense and it's logical. I think that's the beauty of KHI. You don't feel like there's a one-person view. It's definitely a collaboration and a team view that's greater for the whole team, not just for one individual.
Well, the areas you operate within, as in a professional advisory sort of capacity across all these myriad different market segments, would attract a particular type of operator, I would imagine, and there's a sense towards sophisticated maturity of thought, conservativeness, if you actually want to put it that way, and maybe this may have been a bit of an old guy, but you look at the younger crew today, they're in a hurry, and everything's about I got this hack to get me to somewhere faster, and it's like don't be smart, don't put the hard work in, use all these hacks and shortcuts and this to get there. How do you sort of balance that in with the culture of KHI? Because sometimes shortcuts aren't the right way to be going about doing things.
I think you just explained me exactly what you just said there at the start of KHI. I think particularly my generation and the younger generation coming through, there is a lot of hacks and there is a lot of shortcuts to get a result. But I think the key word that Munzurul uses is perpetuity. How can we be in this game long term? A quote that Munzurul says to me all the time, which is, success is easy to hit, but very hard to maintain. And so that was me at the start, wanting to hire people too quickly, do certain things a certain way. But for me personally, it was actually doing the long, boring, the right thing every single day that actually gets the greatest results. And I learnt that the hard way. And I think, with this day and age, with social media, with 18-year-old millionaires who have done things the shortcut way, it doesn't really set us up for the long term. And I think I've learned that being a KHI.
How do you go about framing that yourself? Because you only need to go and look for it, and there's all these very successful people, but whether or not they can continue that, who knows? And it's sort of sage counsel from Munzurul, but there's not that many young people out there becoming millionaires and billionaires overnight by just, I don't know. I don't know what they're doing to do it. They drive Ferraris, and most of them just sell courses on the internet, do they? Is that pretty much what happens?
Yeah. I think...
Is that pretty much it?
Yeah. I think a lot of things you see in social media, is it real, is it not? We don't know. But I think they show you the glamour side of things.
Yeah.
But I think the beauty of KHI is that I've seen it from this, from when I started to the last couple of years and how it's grown. So I've seen there's a certain formula to do things. And of course, there's other ways to achieve results. But again, thinking longer term, how can we sustain this?
So how do you temper that with you and your sort of peer group, your colleagues, or at KHI or your sort of wider network? It just seems everyone's in a big rush to achieve something which probably is unachievable because they've seen it on the internet. Do most people feel as though they are never going to get there, or they just feel as though it's what they're striving for is not real or realistic?
Yeah. It was actually on the way here, Munzurul said that, if someone's trying to grow their skill, what's their personal expectation around it? So if I expect that I need to be good in 7 months and I don't get there, I'll probably be a little bit upset. What if I change that expectation over 30 years? Then, yes, I'm in a rush to get there, but I'm not going to be upset if I don't get there the next 7 months, because I know eventually, with this mindset, I'll eventually get there. So I think it's, again, having that longer term view, but with everything in this day and age and in the world, it's all about how do I get it yesterday, especially my generation. So it's almost counterintuitive to what's out there, because we look at the great businesses right now. I guarantee you that there was no shortcuts. It was all, the formula doesn't change, I don't believe, with success. It was same like health and fitness when I saw it. It's still the same formula that has never changed. But people will come in with different hacks to say, well, this is how you can lose weight. But it's still underlying the same foundational core principles of success, which I think relates to business as well.
It's like, what's that? Like Fitspo, isn't it? Fitness. And it must be harder being a young person today, because you've got this immediacy of every time you pick up your phone, you can compare yourself to what other people are selling as what success means. I don't know many people like it, and I don't know many people that know many people who have been as successful as what you would assume people are on social media. It's must be hard.
Well, it is difficult, and I think for me, I personally deleted all social media. So I think what we input into our minds every single day can control us. So for me, I only go on LinkedIn.
Yeah, good.
And I have other sources of, learnings. But for me, I don't have social media. Every now and then, or check it and delete the app straight away. I think because that's where, comparison can come in. You can start to look at other people in the industry or whatever it may be, and have the wrong expectations around your success.
Expectation management must be the hardest thing as a young professional, I would say. It's you sold this dream of these unknown people who, it's tough. So you got to do it the old-fashioned way. It's like fitness, right? You don't get fit overnight.
That's right.
You don't get fit overnight, and again, you could probably get fit quite quickly, but it's pretty hard to maintain if you stop doing all the things.
Correct.
It's very, very similar to professional development. But LinkedIn is not a bad place if you want to sort of peer review. You sort of get much leads and business off LinkedIn?
I personally don't market at all at the moment. Okay. More use it from a learnings from people in industry, latest updates, what's happening in the market. More for an education, not a lead generation source at this stage.
So how do people find you? What's typically, I know you're busy, so you must be writing lots of home loans.
I have clients, existing clients that have built such a strong relationship. External buyers agents that have relationships with that, we look after their clients. But I would just say, from the outset, I've always just wanted to outservice the clients. I've always been very responsive, no matter what time, day, or day of the week it is. I always wanted to be there for the client, and that's for me generated a lot of reoccurring business throughout my short career so far.
Yeah. What's your ideal client look like?
Anyone, Phil?
Yeah. Anyone needs a home loan?
In terms of a niche, I would just say I actually did a database grab recently. Average client will have 3 investment properties.
Okay.
They can be, working for someone or self-employed, but that's our typical client, what I see in the database at the moment.
And for self-employed borrowers, are lenders got good appetite for them at the moment? I know they've changed a lot of policy. It sort of gets a bit technical for a moment, but this idea that if you're recently self-employed, you need 2 years financials and you've got all this, all that stuff's pretty much out the window now, isn't it?
Yeah, it's changed quite a bit, as you're probably aware. It used to be the 2 years ABN, 2 years trading.
Yeah.
But now I've done as many as kind of 6 months to 1 year in the kind of second tier to third tier space. So yeah, I think your traditional 2 years is gone out the door. But there's definitely an option for self-employed at the 6 to 1 year mark.
Are you across all this new crypto loans, like mortgages? There's this new genre of mortgages where you can leverage crypto and stuff. Are you across all this? Yeah.
I try to stay the traditional lending.
People are asking me a lot about it, and I'm like, okay, it's getting that. But there's always product innovation, right?
Yes.
Of course.
Yeah, that's good. It's hard, Munzurul, cutting through the noise, but that's what the best people do when they're on the right pathway for wealth creation. You must see it.
Yeah, and there's many ways that Aaron comes in as sort of the right candidate for KHI and sort of the future of KHI. Because I still remember that when Aaron sort of started his own practice, and I sort of said, Aaron, there's different ways that people look into different level of age. And sometimes people may go into the investors, they go into the lot deeper on the investors, they may go into mom and dad, different ways, and they're all fine, right? And Aaron says that I'm going to concentrate on service. I'm going to concentrate on service. I'm going to concentrate on responsiveness. I'm going to concentrate on relationship. And I'm going to concentrate on sustainability of all of the above. And I'm going to go deep dive rather than doing marketing. When Aaron says I don't do marketing, Aaron does internal marketing. His service is his marketing. And that's how Aaron sort of came in. And I'm very proud of him in many different ways, how he became very self-sustaining on its own and the leads that he sort of brings in on the group and how he has done it. But the best thing about all of those is that all the hard work and everything is there. But if we set aside all of those, is the humanity behind it. And as long as one has that level of the humanity to really coming in from the bottom of the heart saying that, yes, I want to service all of those clients, not so much I can get a new lead and revenue. I want to service those clients because I genuinely want to help this person. And if one were to say this, then your marketing happens because your client brings in the clients. And I say that to the younger people very often, right, that clients can sense it. And if we are pretending to be genuine, it doesn't work. It gets found out, right? So the only way is to keep working on yourself with the genuinity, and over a period of time all works.
So it's take you long to, and you've got a growing partner base and your partnership model. So you incubate a lot of talented people inside of KHI, and they thrive and foster and move into their own practice. Does it take you long to work out there's a value and ethical alignment? Because that's critical to everything that you do.
Unless the value and the ethical alignment are absolutely brutally is there, we don't invite anyone on the partnership. Right? We absolutely don't, right? That's our first step. And once we do this, then we sort of look back and we say that we still play a sense of pragmatism. We play a sense of pragmatism because you bring in someone with sort of all the right values and the attributes, and sometimes things change.
Yeah.
And sometimes things change which are beyond individuals' control, right? And sometimes people changes as well. Now, when it does do that, is that we take that with that sense of pragmatism. We don't give up on people. We sort of say, all right, you're going through a couple of tough times. Let's stay with this over a period of time. But at the same time, we sort of really point it out when we do something which is wrong. Because when the organization sort of grows bigger, right, is that you've got to be so much careful on everyone. We remind ourselves absolutely on an ongoing basis that we speak about Big 4 today. At a point of time, it was Big 12.
Yeah.
And Big 12 become Big 10 and become
Was it Big 12, was it?
It was Big 12 many years ago, right? And then it became Big 10 and Big 8 and Big 6 and Big 5, and now it's Big 4.
Yeah.
Right? So, and that Big 4 means is that, yes, we blessed what we've done with the KHI Partners, but it just takes that one or two silly things and things to go wrong, and then a lot of things collapse. So that's what the safeguarding.
Yeah, nice. Well, it's good to see the new talent coming through. Aaron, you know your craft. For someone who's only been in the game for a few years, you speak very eloquently, and you obviously know what you're doing. They're mortgage broking, so it's good to see. There's a bright future for KHI with the new cadre coming in. Munzurul, this is, I can't believe it, 12 episodes of our special.
And we covered a lot, right?
Oh, God,
we covered a lot in sort of all technical and non-technical, and also we covered that risk, and we covered the charity side of it as well, quite a bit as well, which is so close to our heart. And we covered with the values proposition. We covered a lot.
Yeah, it's been very philosophical, sometimes been very tactical. You still get curly accounting questions from me where I sort of just go, well, how's that work? What's that work? And, I'd say as someone who uses a firm like Munzurul, and there's a number of different arms, by disclosure, obviously. Munzurul's my accountant, and I sort of leverage other aspects of your business. I have some of my own relationships outside of it, but obviously I use some of your accounting practices through Stephanie, which is very cool. Very tactical stuff. KHI Insurance. I use your superannuation company to do all my superannuation audits and doing all those sort of things. So it is very vibrant and diverse, your estate planning side of things as well. So I've enjoyed learning a lot about it, and I think it's given us a really good footprint and an area where we can propel out for what the next series of In the Balance is going to be as we sort of look towards the next 12 episodes. Now we've got some exciting things sort of sitting there and some ideas, and we'll see how that sort of cultivates and manifests. But mate, thanks for coming in. Thanks for all your time over the last 12 hours. I know you've lifted a lid on a lot of the secrecy of Munzurul Khan. You've normally stayed in the shadows a fair bit, so I know a lot of people have enjoyed sort of learning a lot more about you and your firm and the way you go about doing what you do. But importantly, this intersection between the philosophy of contributing to people's life, but the real tangible tactical aspects and elements that need to get done in order for that to take place.
Yep. And the balance of all of the above. And where I'm grateful to you and to Alex in many different ways. I mean, the whole name In the Balance came in from you and Alex, right? And
it was Alex's idea. I'm not going to claim it.
And we were sitting around and we were sort of brainstorming a whole bunch of names, and Alex sort of comes in as like In the Balance, right? And then we sort of look back like, wow.
It is the right name.
It is the right name.
Everything is, okay, this is all the information. In the balance of things, this is the decision.
And you know what's amazing? Because this is where we almost sort of say the left side and the right side of the brain, right? Like our brain, my brain has got zero creativity, like absolutely zero. That name In the Balance, I would never come up with that name, right? I can do all the maths and everything else, but with the name. So we're grateful. We're also grateful with all those 12 weeks and 12 months and the learning behind it, right? And the mutual learning. So thank you. Thank you for the years of friendship. Thank you for guidance. And this is only the beginning in many ways.
Right, absolutely. Thanks for coming in, Aaron. I've really enjoyed. Catch up. We'll have to bring you back at some point. In Munzurul, we've got some homework to do. We sort of formulate what it looks like. And if anyone's got any ideas, we can really take this any way we like. It's a unique proposition in the balance and alongside with KHI, because it is a universally regarded professional advisory company that has so many different arms, and everywhere you look there'll be an aspect of it which most people will be going through as they go about sort of crafting a wealth creation journey for today and tomorrow. So we can really access that as much as we like, and we can be hyper focused in very sort of strategic or tactical applications of these things, but also like philosophically talking about these things as well, right? Because nothing happens in isolation. You're investing in a very dynamic and vibrant market, which is changing by the day. So your plans might not necessarily change, but the market around you will change.
Absolutely. And adaptability is fundamental. So as one example is that we're looking deep dive in terms of technology. And there's different elements of the technology that we're deep diving. We sort of look forward and we sort of say that a practice and what would be some of the servicing arm of that practice. And one say that in future is that your technology service line as a revenue generator not only your efficiency creator, but also as a revenue generator, would be a massive fill.
Yeah.
Massive fill. That old saying, which is new saying, but now getting old saying, is that it's not so much the technology which will replace us, it's the individual who utilizes the technology. They will replace the individual who are not utilizing the technology.
Absolutely. Yeah. They're tools in a toolbox, and
Exactly.
you can learn how to use them, and no doubt that'll be an ongoing theme for Inner Balance in the future. Munzurul, thank you, mate. Thanks
Thank
for
you
coming
very
in.
much.
Very good. And if people want to track you guys down, hello at
KHIPartners.com.au.
or you can go the old-fashioned way.
Admin.
So that's the
KHI
left. That's a right, admin at KHI Partners.
That's right.
And then go and check out. Just go to the website as well, khipartners.com.au. You can get a real sense for the broad proposition that KHI has. Do yourself a favour, go and do it. And if I can be of any help to anyone, if people want to connect in, if you have problems with that, just get in touch with me. You can track me down pretty easy. But I know Munzurul's team will be hugely accessible. For any of you that want to have a yarn to him. This is Inner Balance. This is the 12th instalment for our launch series there, 12 months in the making, and it's great to be on that journey. I look forward to seeing what the next 12 months looks like. Until we see you then, till then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.